Hey everyone, I want to tell you about my grandpa Leo. He was a pillar of his community, a small business owner who believed in hard work and things you could hold in your hands. His entire investment philosophy was built on tangible assets, real estate, bonds, and those beautiful embossed paper stock certificates that he kept in a safe deposit box. He'd tell me, "This is what a real portfolio looks like, son. Something with a foundation, something that doesn't just disappear." If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. When I first told him about HBAR, he was skeptical. He'd hear about the wild swings, the scams, the FUD, and he'd just shake his head. It felt like I was trading his legacy for a lottery ticket. And honestly, there were times I felt the same way. When the price dipped, when the market went sideways, I'd look at my wallet and feel that familiar knot in my stomach. Was I just another retail investor caught in a game of chance? But what I'm about to show you today is the story that finally makes sense of it all. It's the moment the old world of my grandpa Leo meets the new. It's the key to understanding how we are not just investing in a token, but in the foundation of the $1.70 quadrillion future of finance. You need to stay because this is the knowledge that changes everything. Let's get straight to the point. For years, we've been waiting for the green light, the one signal that the suits, the institutional giants, were finally taking crypto seriously. We've been told that we are too small, too volatile, too risky. The world of my grandpa Leo, with its regulated paper and its safe deposit boxes, felt a million miles away. But what happened this week just shattered that entire narrative. Grayscale, a company that manages billions in assets and is a titan in the traditional investment world, has officially filed their S1 for a Hedera Trust ETF. Now, I know you've heard about ETFs before, but an S1 filing isn't just a rumor or a proposal. This is the legal, formal declaration that they are ready to launch. It's a bold statement, a sign of conviction, and a move that proves HBAR is no longer a fringe asset. Why is this so important for you, the HBAR holder? Because this filing is the key that unlocks the floodgates of capital. We're not talking about a few million from a handful of retail investors. We're talking about the potential for billions, even trillions, to flow from the traditional investment sector. These are the pension funds, the hedge funds, the financial advisors who manage the wealth of the majority of people on this planet. They don't buy tokens directly. They buy regulated products with a ticker symbol, and they buy them from trusted names like Grayscale. This ETF will be that on-ramp, that single point of entry that allows them to get exposure to Hedera Hashgraph in a way that is familiar and safe. Think about the sheer scale of the capital that's sitting on the sidelines right now. It's staggering. Grayscale is literally paving the road for that money to come pouring into our ecosystem. They've already added HBAR to some of their institutional baskets as a precursor, signaling that this isn't a speculative play, but a strategic long-term move. This is a powerful, almost silent revolution. While most of the market is focused on the latest meme coin or a flashy NFT, the real-world utility and the institutional on-ramps are being built. You're on the inside, privy to the knowledge that the traditional media outlets are just now starting to report on. You have the knowledge that HBAR is not just a cryptocurrency, it's a regulated, institutional-grade digital asset that is now on the radar of the largest financial players in the world. This is the culmination of years of work from the Hedera team. They didn't chase hype, they chased real-world adoption and regulatory clarity, and now it's paying off. Grayscale's S1 filing is the ultimate stamp of approval, a signal that we have moved from the Wild West of crypto to the new era of institutional-grade finance. And this is just the beginning. The ETF is the bridge, but what I'm about to show you is the city on the other side. This is the technology that will not only use the HBAR token, but will make it an essential, high-utility part of a financial system so advanced it makes Grandpa Leo's ledgers look like cave drawings. The ETF brings in the money, but the next part is where the true value and utility are created. It's the single most important development you need to understand right now, and I'm going to break it down for you next. Don't you dare click away. All right, let's get into the heart of the matter. The Grayscale ETF is an incredible step, a massive vote of confidence, but it's not the ultimate value driver. The real game changer lies in the technology that HBAR is now enabling. I'm talking about a groundbreaking innovation called the pool token, and Hedera Hashgraph is at the absolute forefront. This is the engine of the $1.70 quadrillion market. You see, for decades, institutional investing has been a slow, clunky mess. Imagine trying to buy a basket of assets, say a mix of stocks, bonds, and real estate. You'd need an army of lawyers, transfer agents, and mountains of paperwork. My grandpa Leo understood this friction. It's why his investments moved at a snail's pace. But That's exactly what Hedera and the UK-based institutional exchange Arcax have just done. They've launched the first ever pool token on the Hedera network. This isn't some small DeFi experiment. This is a fully regulated institutional grade product. The first pool token represents a fund of money market funds holding equal parts from these four financial giants. Think about that for a second. Gamers talk to servers not as an asshole with the world's largest asset manager, BlackRock, with over $9 trillion, 0 cents in assets under management, is now directly connected to the Hedera network through this innovation. The implications are mind-blowing. This changes everything. Forget the old way of doing things. Pool tokens enable instant fund creation, instant transfer, and what they call composability. What is composability? It's the ability to mix and match different tokenized assets like digital Legos. You can combine low-risk assets like treasuries with higher-risk assets like cryptocurrencies. Imagine a fund of funds that you can buy and sell in seconds with near-instant settlement. This is financial engineering that was previously impossible in traditional markets. And this isn't just for money market funds. The technology extends to equities, debt, commodities, and even cryptocurrencies. Arcax, a company we've covered before as pioneers in the UK's tokenization efforts, chose Hedera for its speed, security, and low fees. They're a regulated powerhouse, and they've been working with financial giants like Lloyd's Banking Group to test this technology. They're building the future of institutional finance, and Hedera is the foundation. But the real question is, why does this matter to you as an HBAR holder? Because every single one of these transactions, every single time one of these pool tokens is created, transferred, or used as collateral, it costs a fraction of a cent. And that transaction fee is paid in HBAR. This isn't some speculative play on a new project. This is a real world utility that is already generating network traffic and value. As the demand for these frictionless products grows, so does the demand for HBAR. This isn't just about an ETF. This is about Hedera becoming the operational backbone for the future of global finance, an engine running on HBAR. Stay with me because next we're going to dive into the most exciting part, what this means for the price and your portfolio. Let's dive deeper into a concept I just mentioned, composability. Now, this might sound like a technical term, but it's the ultimate financial superpower that is being unleashed right now on the Hedera network. This is the secret sauce that will make HBAR indispensable to the financial world. You see, for my grandpa Leo and his generation, creating a diversified portfolio was an incredibly rigid and slow process. You'd have to buy each asset individually, track them separately, and if you wanted to change your allocation, you'd have to go through a whole new round of paperwork and transactions, each with its own fee and delay. It was like trying to build something out of a massive pile of concrete blocks that were already set in place. Composability changes that. Imagine that every financial asset, a share of stock, a piece of real estate, a bond, or even a money market fund, is now a digital Lego block. With Hedera's pool token functionality, you can now snap these digital Lego blocks together to create entirely new products. You can create a fund of funds that holds BlackRock, State Street, and Aberdeen all at once. You can create a basket of emerging market stocks combined with a low-risk government bond. You can even combine traditional assets with cryptocurrencies in a single, transparent, and instantly transferable token. This is financial engineering on a scale that was previously impossible. It's the ability to design and create a financial product in hours, not months. This capability is a direct response to the needs of the modern on-demand economy. Institutional investors need to be able to react instantly to market conditions. They can't afford to wait days for a trade to settle or for paperwork to be processed. The old system, the one my grandpa Leo knew, was designed for a 9-to-5 world. The new system, powered by Hedera, is a 24/7 global market that never sleeps. And every single action, every single transaction, creating a new pool token, transferring it, or using it as collateral is happening on the Hedera network, generating fees that are paid in HBAR. This is the key to HBAR's long-term value. It's not just about speculation, it's about real, tangible utility. When BlackRock needs to create a new investment product for its clients, they can now do it on Hedera with the speed and efficiency that their legacy systems can't even dream of. When a financial advisor needs to rebalance a portfolio for hundreds of clients, they can do it in seconds with a few clicks. The applications are limitless. We're not just talking about funds anymore. We're talking about tokenized indices, structured investment products, and commodity baskets. The entire financial world, piece by piece, is going to be rebuilt on a foundation of fast, secure, and regulated ledgers. And Hedera, with its unique Hashgraph technology, is proven to be the ideal choice for this new era. The problem, of course, is that the price action right now doesn't reflect this. It feels like we're just treading water, waiting for the next big move. But what if I told you that this is the most exciting part? The quiet before the storm. The final period of accumulation before the dam breaks. In the next segment, we're going to tackle the biggest problem that still plagues traditional finance and show you how Hedera is solving it right now in the real world. This is the part of the story that turns a good investment into a life-changing one. Don't go anywhere. Let's talk about a problem that has plagued the traditional financial world for centuries: friction. It's the hidden tax on every transaction. It's the paperwork, the delays, the transfer agents, the custodians, and all the middlemen who take a piece of the pie and slow everything down. My grandpa Leo was taught that this friction was just a part of doing business, a necessary evil. But for us, the digital natives, it's a glaring inefficiency that is ripe for disruption, and Hedera is the answer. The recent announcements from Arcax and their launch of pool tokens on Hedera are not just about creating new products. They're about eliminating this friction entirely. The old system required days to settle a complex transaction. The new system, powered by the Hedera Hashgraph, provides near instant settlement. Think about the implications of this. It reduces risk, it increases liquidity, and it frees up an incredible amount of capital that was previously locked up in the settlement process. This isn't just a convenience. It's a fundamental change to how capital markets operate. Let's look at a concrete example that the transcript mentions. Hedera has already conducted the UK's first initiative of settling an FX foreign exchange market using tokenized UK treasuries. This is a massive deal. The FX market is the largest and most liquid market in the world, with trillions of dollars in daily volume, and Hedera is already proving it can handle the institutional grade transactions required to make it more efficient. This is not a test net. This is the real world. The trust that these institutions have placed in Hedera's technology, its speed, its security, and its compliance is a testament to its enterprise-grade design. The pool tokens themselves can even be used as collateral. Arcax's network is specifically designed to support the use of regulated digital assets as collateral between institutional counterparties. This means that a financial institution can use a pool token representing a basket of money market funds as collateral for a loan, and that entire process can happen instantly with no paperwork, no intermediaries, and no delay. This is an entirely new financial primitive, a new way to build a financial system that is more resilient, more efficient, and more secure than anything that has come before it. The real-world consequences are profound. It means lower costs for everyone, from the largest institutions to the individual investor. It means a more dynamic and responsive market. It means that the next global financial crisis might be prevented because the system is designed to settle in seconds, not days. This is the ultimate promise of Web3 and DLT, and Hedera is the one delivering it. You, as an HBAR holder, are at the epicenter of this revolution. But I know what you're thinking. If this is so big, why isn't the price shooting up right now? That's the most important question, and is what we're going to tackle in the next segment. I'm going to show you why this quiet period is the best possible thing that could happen and why you should be feeling more confident than ever. Now, let's get down to what's really on everyone's mind. You've heard the big news, the Grayscale ETF filing, the Arcax pool token revolution, and the titans of finance like BlackRock building on Hedera. All of this is incredibly bullish, but I know many of you are looking at the price action and feeling that familiar unease. The recent price dip, the sideways movement, it can be discouraging. I get it. I've been there. You look at your wallet and think, when is the moonshot coming? When do we get to that next level? I want you to forget the FUD for a moment and look at the bigger picture. This recent price action is a textbook example of a phase 2 breakout, a retest, and a decline in volume. It's the market catching its breath before the next major leg up. This is a blessing in disguise. It's a moment of consolidation. The smart money isn't selling, they're accumulating. They're looking at the fundamentals, the Grayscale ETF, the Arcax partnership, the real world utility, and they're buying the dip. They understand that a quick spike would just attract short-term speculators. What we are seeing now is the foundation being laid for a sustainable multi-year bull run. The big moves are coming. Let me ask you this. When was the last time a legitimate cryptocurrency with real institutional partnerships was this undervalued? The price right now doesn't reflect the tectonic shifts happening behind the scenes. Think back to our previous videos. We've talked about Hedera's work on Project Guardian in Singapore, its partnerships with financial giants like HSBC for FX settlements, and its role in the UK's tokenization space with players like Arcax and Lloyds. Hedera is building the digital arteries of the global financial system, one strategic partnership at a time. The market hasn't caught up yet, but it will. So here's my promise to you. We are on the cusp of a major breakout. As the market sentiment shifts from speculation to real world utility, the price will follow. You will see HBAR in the multiple dollar ranges in the not too distant future. The beautiful thing is we've been talking about this since HBAR was just a few cents. We've been here through the dips, the FUD, and the sideways movement. The people who are going to make life-changing money are the ones who ignored the noise and stayed focused on the fundamentals. This is a rare moment in time. You have the chance to position yourself ahead of the institutional rush. The Grayscale ETF will unleash capital from pension funds, hedge funds, and high net worth individuals who have never bought a single crypto token. And the Archax pool tokens will provide the digital infrastructure for them to do it. The demand for HBAR will not just be from retail investors like us, it will be from the very financial institutions that once mocked crypto. Don't click away, because in our final segment, I'm going to reveal the ultimate secret to maximizing your gains and ensuring you're ready for the coming tidal wave. You've stayed with me, and for that, I want to thank you. You've now seen the full picture, from the Grayscale ETF opening the floodgates to the Archax pool tokens providing the infrastructure for a quadrillion-dollar market. You understand that this isn't just a hype cycle, this is a fundamental shift in how the world does business. But here's the final and most important lesson. This story isn't about me or Grayscale or Archax. It's about you. Remember my grandpa Leo? He built his wealth on the bedrock of the past. He believed in paper and tradition. We are now living in a new era, and you have a chance to not just participate in it, but to truly thrive. You have the chance to be an early investor in a technology that is poised to become the digital backbone for global finance. This is your moment to prove Grandpa Leo's generation wrong, but with respect, to show them that the future of finance is not only secure and regulated, but also faster, more efficient, and more accessible than they could ever have imagined. Here's the thing though, the price will go up, but there will be more dips. There will be more FUD. The mainstream media will try to tell you this is a fad, but you're different. You've stayed to the end of this video. You've done your research. You understand the real world utility. You know that BlackRock and State Street don't partner with projects that are just hype. They partner with the best, and they have chosen Hedera. This is your platform to share your story. I want to ask you a question, and I want you to answer it in the comments below. What part of this Hedera news makes you the most bullish, and why? I want to hear your thoughts. I want to see the debate unfold. Is it the Grayscale ETF, the Archax pool tokens, the ongoing work with major financial institutions? Share your perspective, and let's build this community together. And while you're down there, make sure you smash that like button. It's not just a button, it's a signal to the algorithm that this content is valuable, that you want more of it, and that this story needs to be told to as many people as possible. It's a way to ensure that this video reaches the people who are still struggling with FUD, the people who are about to sell at the worst possible time. The final payoff? It's not just a price prediction. It's the knowledge and the conviction that you are invested in a world-changing technology. You're not just holding HBAR, you're holding a piece of the future. You're holding a ticket to a world where investing is instant, global, and seamlessly integrated into our lives. You've learned that the true value of HBAR is its utility, its ability to act as the silent engine for a $1.70 quadrillion market. So hold on tight, share your thoughts in the comments, and I'll see you in the next video as we continue our journey to financial freedom.